for on-chain asset management. And we have honored speakers from BitGo, VanEck, the World, CoinShares, and zerohash. So please, dear speakers, come to the stage, and we can start from here.
We just sit underneath our names. That's great. Hi, everyone. How's it going? It's a lovely day. Like that breeze coming through. As you can tell, I'm not from here, so I might be looking longingly out the window throughout this session. My name is Katie Perry. I'm the CMO at zerohash. We're a digital asset infrastructure company, and really excited to be here for this last panel of the day. Custody, compliance, and scale, and we're going to talk about the operational case for on-chain asset management. So joining me to my right, we have James Butterfill, Head of Research at CoinShares. Then we have Artem Stopnevich, CEO at The Vault. Thijs van Boven, tell me if I got that right, Thijs? Yes. All right, good use of Claude there beforehand. Head Trader Digital Assets at VanEck. And Jody Mettler, COO of BitGo. And so really a lot of the interesting conversations, I was just at Money 2020, everyone's talking about on-chain infrastructure. The operational aspect has so many components to it, and it's so exciting to have these speakers with us today because they cover various facets of it. So I know we got to cram a lot into a session, so I'll jump right into it. The first question I want to ask for all of the panelists is, we're obviously here to talk about operating on-chain systems. So starting at the top, what's something that sounds simple in digital assets until you actually try to do it, until you actually try to operationalize it institutionally? I'll start with you, James.
I'll take it very top level because I think the rest of them are much more deeply involved in the settlement side of things than I am. But
British are so humble like that,
It is the settlement side of it. I think, in the TradFi world, it's T+2 for settlement for the compliance team and the risk team. And sometimes you can achieve T+1 settlement, but in the crypto world, it's T plus sort of 1 second or 10 seconds or something, and the two just don't work well together. I mean, you can sometimes have cross-jurisdictional compliance and settlement agreements that can take sort of 5 days, and that is, I don't know if I've got the answer to that solution. I mean, I thought maybe sort of zero knowledge proof type technology could deal with these kind of problems, but I think existing TradFi is really far away from embracing that technology at the moment.
Yeah, the DeFi layer itself is intuitive, but when you try to cross it with the other rails, it can get complicated. Artem, how about you? Something that sounds very simple, but until you actually try to do it.
Yeah, I would say the notion of cryptography and the not your keys, not your crypto, which has started off the whole thing about using digital assets. When you go institutional, it creates an enormous layer of complexity that they're still trying to deal with. The design of the system, how you protect your digital assets, who owns the keys, and all of that. So even the original idea was pretty simple, that you have your private key and you can access your digital assets at any given point of time. Well, now, going institutional and trying to do all the different layers of protection, operationalize it, and get the approvals in place, creates enormous variety of solutions and really makes it challenging to kick off this process, I guess.
Thijs, your perspective from VanEck.
Yes, I mean, setting up, so for me at VanEck, I work at a hedge fund. Setting up the hedge fund structure operationally took us like a year to get us going. We started off by onboarding Coinbase, which was easy to buy some crypto assets in the start. But we obviously also wanted to have access to the smaller tokens. So coming back to your question, I would say getting access to small tokens is something that is really much harder than just opening your own crypto wallet and buying it yourself. It seems easy, but yeah, we finally have access, so we're happy with that. But it's not so easy to get liquidity in small tokens.
How about you, Jody? You work with very large institutions. What do you think, might sound easy to them until they actually start doing it?
Yeah, I think a lot of things sound really simple until you start to operationalize it, and particularly when institutional capital starts showing up at scale. Institutions aren't necessarily ready for operationalizing the controls that come with 24/7 settlement, global liquidity and movement. I think it sounds really simple on paper, but once you actually have to implement that in a traditional financial institution, it's very difficult.
Yeah. And James, I think you started to address this initially, but from the institutions that you're working with and looking at, operational assumptions from the traditional finance world that don't translate well on chain, what are some of those things that might seem innately simple in an on or an off-chain situation, and then when you're translating it to the DeFi world, there's some complexity added there?
Well, I mean, firstly, I mean, a lot of what I do at CoinShares is going to see institutional investors around Europe. And I think in the crypto world, there is assumption that they're all embracing it. And they're thinking about it now, most of them, but they're not actually doing it just yet. And, you know, I think getting them on board with that, I think some of them, it's like a frog in a boiling pot. They're very comfortable with their current infrastructure, and they feel that there's no need to have crypto infrastructure and all the kind of operational efficiencies that you get from that. And it might be too late for many of these companies that they suddenly realize actually the pot's a bit too hot and they can't get out, so to speak. So, yeah, I think the main one is liquidity versus legitimacy. And I give Hyperliquid as an example. Hyperliquid now is trading around $5 billion a day in real-world assets, and that's comparable to the whole of the London Stock Exchange, the largest European equity exchange. And that is liquidity versus legitimacy. So TradFi think that legitimacy is something with a big brand and a well-known name, but actually their participation in the crypto world might be very, very small. And so it's bringing those clients on board to understand actually that they might have to embrace much tech that feels uncomfortable to them. And I think there's a bit of a hump for many of them. I mean, we've already heard it in the stablecoin world. We had this idea, or CBDCs. Many governments felt that actually launching CBDCs was a great thing for operational efficiency. And then some of them have turned around, I think it's the Danish government, have turned around and said actually the operational difficulties outweigh the operational efficiencies we might get from it. And I think many traditional asset managements have that kind of hump to get over that sort of tech burden, so to speak.
I love the frog metaphor, not so much if you're the frog, but the last point you made actually reminded me a lot of the conversations going on about AI right now, which is like the operational cost of that and then the upside, and that's where you're getting some of the debate on the ROI front. So it's interesting to see that parallel to digital assets. Thijs, for you on the asset management side at VanEck, where are you seeing the biggest operational mindset shift happening internally?
Yeah, for us it was, I think back in 2015, 2016 was, should we do anything in crypto? We started in 2017, launching the ETNs in Europe, and also filed for the first Bitcoin ETF in the United States. The biggest shift was going from should we do anything to now how can we do stuff. So for example, you just mentioned Hyperliquid. We would love to have access to these trading volumes and liquidity as well, but simply we cannot, because from a compliance or legal perspective, we don't know who the counterparty is, so that is a big bottleneck for an institution getting into DeFi. But yeah, we see it growing, so we just launched a Hype ETN. That is something we can do, so we're trying to be helpful of all these crypto projects. But just from a trading perspective, we are still not able to onboard with these exchanges yet. So the question I'm getting every day is like, can we do this, can we do that? And I have to figure out with compliance department and legal department if it's possible. And I want it to be possible, but still it's not today. I think in the next 5 years we'll probably be able to.
Real quick, what do you think needs to happen for those conversations to be easier to give a quick answer, or what needs to happen to make those ideas possible?
Well, first maybe start with licenses, like a MiCA license, or maybe be regulated in the US. So Hyperliquid is, I think it doesn't have a license at all, but you do see with Polymarket or Callsheet, they do have licenses in the US, starting US businesses as well. But then again, the Polymarket US, I don't know if anyone have seen it, but there's like so little liquidity and no volume. So not sure if that's the answer there, but I would say it's a start for us to be onboarded with these platforms, yeah.
Yep. One of the misconceptions outside the industry is that blockchain, kind of removes the operational complexity automatically. But I think one place you don't see that necessarily all the time is on the custody front. So for you, Jody, custody seems like an area people are underestimating when it comes to sort of the operational rigor and the capital that comes around that. So what becomes difficult when these companies are thinking about custody? You have a lot of custodies wanting to move assets into cryptocurrencies. When they're moving in this space, operationally, how do you advise these people as they get going on the custody front?
Yeah, I think it's twofold. First, it's scale, right? A lot of these institutions are operating in a test or a prototype environment, and now they're moving into full scale. They don't realize the operational uplift that comes with that. And then second, I think it is operationalizing risk management. When you're holding a large amount of cash or cryptocurrency, you have certain risk parameters that you need to do, particularly for capital, a lot of licensing, as you were talking about. It's super important that people really understand those complexities and that they're going to likely need to hire people to help service these type of risk operations.
Yeah. Do you think the people in these roles now, are they learning on the fly sort of how to be operators in this space? Or are they people kind of coming in from maybe crypto native roles? What does that look like just from the people you're working with internally?
So my background, actually, I spent 22 years at Citibank. So I come from a TradFi into DeFi or crypto. So I think what you're seeing in a lot of these companies is they are pulling from both sides of the spectrum. You're going to get the traditional financial people that can come in and set up these risk operations. And then you have people from the crypto space that understand the technology and how that moves. So I think it's both.
Yeah. And Artem, when you see firms start managing digital assets operationally, whether it's treasury workflows, reporting, reconciliation even, where do you see the friction showing up first?
Yeah, that's, I think, a lot of good points Jody made, that there are a lot of intrinsic differences between operating traditional finance and operating digital finance, right? And in terms of, and it could be different, like you mentioned, treasury operations, like the reconciliation, calculating the NAV for the asset managers when you have 24/7 period of trading, or when you have different tokenomics of the tokens that you invest in. So it's very kind of different layers, financial layers have been created on top of what we used to. So you have to adjust the kind of the software that you're dealing with and what we deal with, right? So I can speak from our own experience, is really preparing the institutions to handle the new ways of working. But also I think the biggest part, actually, it's not just this part, right? But it's also the key management, because one of the biggest difference between digital assets and traditional assets, every single player becomes kind of responsible for their own assets. So it's irreversibility, right? So there's a lot of security questions, a lot of operational questions which get raised on the key management side, which didn't exist in traditional finance. So as Jody mentioned, a lot of this piloting and scoping and design process have to be in place before you actually go and launch. So it could be a longer time to market, so to speak.
And could I add just a little bit to that? Artem makes such a good point. One of the things I keep hearing from institutional players in this space is they end up running rails on both the traditional financial system and a digital asset, and that's really difficult for them because they want an integrated system that can handle both. That doesn't exist today. So the interoperability of these financial systems really needs to come along, and that's going to probably be in the next couple of years.
As we've all seen and experienced, and a bunch of you have mentioned pilots coming on this panel today. I'm curious specifically at the evolution from the pilot to the full scale out. Like what types? And I'll start with you, Jody, because you referenced pilots before. But I'm curious what are companies or clients looking for in that pilot program that gives them the confidence to scale, or what needs to go right in the pilot situation for it to scale into something bigger?
I think they need to see that it works like what they're familiar with. From a pilot standpoint, they need to understand where there's going to be subtle differences from that, but if they get comfortable that a pilot phase looks and feels from a liquidity standpoint, from a settlement standpoint, with what they're familiar with today, that is the next step into going full scale. And then that's when they realize, 1 or 2 transactions a day is very different than hundreds or thousands of them a day.
Yeah. Thijs, what are you seeing from people who are sort of dipping their toes in the water to going full scale? What's going right, or what's not going wrong?
Yeah, I just wanted to comment on this. I mean, yeah, we never used the pilot because we're always onboarding for 6 months. So if you're making a decision somewhere, we definitely have to go for it. But who's the target audience then for these pilots? Like who's using those pilots?
And we're getting them from all kinds of asset managers, RIAs, those types of things. Anything that you would see in the traditional space, they're coming in for these pilots now because they want to figure out if it works for their business.
Got it. And start small, and then okay, got it. Coming back to your question, what was it? Sorry.
I feel like you sort of answered it. Well, you just by saying you don't do pilots, right? That's not irrelevant.
Well, yes, on the data research we do pilots, but not for custody, right? Because we are not moving investors' money into a pilot. That's not something we can do. Maybe with internal capital, but still, yeah, most of the time it takes 6 months or longer to be onboarded, and then we are definitely going for the product instead of just using the pilot.
Artem, how about you?
Yeah, I mean, from our side, I guess there's a lot of talk about piloting the product, or the new kind of revenue stream that you're trying to launch in the business. But what we deal a lot with, right, we work with institutions who are just coming to the digital asset space, right? So a lot of things they get wrong is, well, it could be blatant for me to say that, but they piloted the product, but they haven't piloted the operational process, right? That's the biggest thing. And when they start launching, suddenly it's a freeze of operations, because then they have to figure out how actually to operate it at scale, what Jody mentioned. And also a lot of things we're seeing now is that people who entered the space, or companies who entered the space 2, 3, 4 years ago, now completely rethinking their operational workflows, because now you have the increase of usage across different departments, different space, so they are trying to rebuild the architecture. So you really have to start from the design point before you go operational. So a lot of things we are pushing on now, right, is before you actually launch digital assets, spend a lot of time on architecture and designing how it's going to look like for kind of future-proofing your operations.
And James, among institutions that are potentially looking to deploy capital in these spaces, what level of trust is required to do so? When they view something like a company doing a pilot versus a full scale out, how do they view those test situations versus waiting to make sure it actually takes hold?
Yeah, so CoinShares doesn't do pilots. We launched the ETFs, and a lot of kind of the piloting in a way is conceptual as to is this product that we're going to launch a valid investment? And there is, I suppose, a bit of we have to create a fundamental investment thesis around that product, and then hopefully that is the risk for us. So we take it away from the clients, and we hope that clients decide to invest in that product in that way, I suppose.
Yeah.
And sorry, but that's also quite hard, right? Because we also have the crypto ETNs at VanEck, but you always, when a token is getting some hype, then it's a good time to launch these ETNs, but it also takes time to get them on the market. And then 3 months later, sometimes they're already not that interesting anymore, and then you launch the wrong products.
And then you find that your custodian doesn't custody that asset or offer you a staking yield, or there might be some tax complexities around staking, and how do you deal with that? That can get quite complex.
Yeah, I would just add on that, a lot of conversation was on like our demand for us is like how quickly can you list a new chain or a new token, et cetera, because guys, for asset managers or trading houses, right, they're trying to explore these idiosyncrasies, or how you mentioned, like these new opportunities which creates in the crypto space, and typically it takes time for the infrastructure to adjust. There is no easy mechanism now to just go from the get-go and launch something new. If some exceptional team has done something, but they're small, they haven't deployed, and they haven't won the trust of the institution, the infrastructure, very hard to get it going straight away.
Slightly off topic, but I think interesting, is when you talk about chasing these, I don't want to call them trends, but chasing the themes that are emerging, and there seem to be popping up very quickly, more so than traditional finance. Are there any emerging themes that you guys can share on, I'm looking on the research side, that you're exploring or might be coming to market soon, even at a high level? I'm curious sort of what's on the horizon.
Well, I think from CoinShares' perspective, we've definitely benefited from the kind of broader crypto theme, and Bitcoin and Ethereum and a few others. And that crypto theme, I think, has gone to the sidelines a little bit, and it's AI that's sucking up all the liquidity at the moment. And we're thinking quite deeply about, well, what's next after that? I think AI has this, what I call a revenue hump. You're spending lots of CapEx right now, and in between that, or revenue dip, in between that revenue being delivered, there's a dip. And I think that's when AI might fall out of favor. I'm not necessarily saying it's a bubble that's going to burst. And then what theme will take its place at that point? And if you think about what's happened legally in the US or in Congress with the Stablecoin and Genius Acts and now the Clarity Act, I think, and you listen to what Scott Bessent says, who thinks stablecoins are going to be a $2 trillion industry by 2028, then yeah, I think something around stablecoins, something around tokenization of real-world assets. There's huge. I mean, what McKinsey thinks RWAs will be a $4 trillion industry by 2030. So and it's only a $38 billion industry right now. So there's huge potential growth there. So we're exploring equity themes or companies involved in the tokenization of real-world assets, and I think there's a great opportunity there, and that will be the next kind of hype thing after AI.
Yeah. Thijs, what about you? Does that resonate with VanEck?
Yes, we are also closely looking to the stablecoin trend. We cannot launch a stablecoin ETN, unfortunately, because then no one would invest in it. But
yeah,
yeah, there's still no product yet. I believe that is a good token that is benefiting from stablecoin adoption. But there definitely will be. We haven't talked much about DeFi, but probably someone is going to figure out how to get risk reward in these yields, and then that protocol will probably be an interesting token to also launch an ETN in. But we haven't seen any yet. So we just launched again the Hype ETN, which was for us also cash flow driven, fundamental to also launch, but yeah, for now we're not looking to launch any new tokens. What I've heard of.
Yeah. Well, we brought up tokenization, so let's go there. I was down the road at Money 2020, and stablecoins, AI, tokenization. Those are the three things. You could pretty much stumble upon any panel and cover those. There's obviously a lot of excitement around tokenization right now. But there's a gap, I think, for some people in the theoretical utility. In the US in particular, even, when we talk about tokenization of things like equities, we already have fractionalized stocks and things like that. So I think there's a gap in sort of what those application and use cases are. So I'm curious, now I'll pose this to all of you, but where are institutions actually seeing practical value from tokenization today versus what might feel more aspirational down the line? I'll start with you, Jody.
Yeah, we're seeing tokenized money market funds on a regular basis coming out. Tokenized equities, obviously there's still some work to be done in the infrastructure to get that really fully functioning. Real world assets, it's going to be tough. It's going to be an interesting process. I do think it's going to come. I think real estate's going to be the first one. That's my personal opinion, not investment advice. But that's I think 3 or 4 years down the road before we really get wide-scale adoption of RWAs.
Yep. Thijs, how about you?
Yes, I would agree. I mean, it's still early in money market funds. I'm also trying to think so today it's all like within private ecosystems, and people make use of it, but from a personal perspective, I can't do anything with it. So I would love to have a crypto wallet that has like a tokenized money market fund in it, so I'm also earning yield on that, and then also that I want to be able to spend my crypto with merchants, and that's still not possible today. So then I also have to offboard anytime I need to be able to pay somewhere. So I think we still have a long way to go there, but people are using it. We see growth in the money market funds, tokenized money market funds. On the equity side, you especially see that these tokenized illiquid assets are getting adoption. So a SpaceX or an Anthropic that's being traded now on in DeFi at very high valuation. So people are paying a very high premium for it. But still, it's interesting to see that you can now get access to illiquid stuff. Is it still illiquid then? I would argue it's not anymore, because anyone can now buy these illiquid firms.
It'll be interesting to see what happens with those tokenized stocks once those companies do go public, and to see that behavior next to each other. Artem, how about you? Are you seeing any like short, near-term applications of tokenization, or are there things you're excited about in the future?
Yeah, I guess the conversation took a completely different turn over the last year or two when big financial institutions started replumbing basically their settlement layer and stablecoins. So it's not surprising you're hearing stablecoins and tokenization in the same bracket or on the same kind of topics, because basically once the financial institutions start moving their settlement into stablecoins and using cryptography and blockchain for payments, and they're going to be holding that liquidity in blockchain, they'll want to. It's very inefficient to then go back to fiat money and then invest in the fiat equities and the fiat stocks, etc. So they'll want to stay on-chain, right? So when you want to stay on-chain, you want to deploy all the different financial instruments already on-chain. So, I mean, back in 2019, we even had an idea in a company which was trying to, issue the security on-chain. So right now, tokens are wrappers for real-world assets, be it financial instrument or real estate, etc. And for the last 4 or 5 years, the conversation has centered about democratizing assets for the population, right? It could be art, it could be cars, it could be real estate. Well, right now, the tokenization hype is not about that, right? It's about providing access on-chain to all the instruments we're used to. So I guess that's my take.
Yeah. How about you, James?
Yeah, I think prediction markets is an area that's becoming incredibly popular. Polymarket, I seem to be looking at it more than Bloomberg now to get a steer on what's going on in the markets and what people's opinions are. And then the other side is you just have to look at hyperliquid. And if you look at the details on what people are trading there, you can see, it's so easily accessible. Late last year and early this year, the debasement trade was a big trade, and it was precious metals that were dominating on hyperliquid. And since the Iran crisis, it's been energy commodities being traded there. So it's whatever the zeitgeist is, certainly seems to be traded on that. So I think that's the way it's going. I totally agree on money market funds and stablecoins. That's a massive growth area, and there's huge institutional push, particularly from BlackRock, Biddle, and other institutions like JP Morgan for that.
Yep. I think we have time for a couple of audience questions. If not, I have some lightning rounds, but I can walk. Do you want me to walk around with Mike? Oh, you have a mic. Okay, does anyone have any questions they would like to ask the panelists? Stunned silence. You, sir.
Okay, so we have been discussing about these stablecoins and basic financial instruments in the digital asset space. My question is, what would be your prediction of seeing advanced financial instruments coming into being on, for example, lending, investing?
I'll try to tackle this a little bit. I think, I would describe an advanced sort of investment of maybe something like decentralized finance. And, it's not that we've not done it, we've not launched a product in that. Well, we have a very small product, but it's for a very niche group of investors. One of the biggest problems is CoinShares is a listed entity. If we create a decentralized finance product, are we funding terrorism? I don't know. So how do we solve for that problem? And I think that's very complex. I do think there's ways of solving it around, there's a really interesting company called Keyring that do zero knowledge proof at the onboarding stage. And I think that's a really elegant solution to that who you funding to a DeFi problem. But I think there's a lot of challenges there for institutions to embrace that kind of investment.
Yeah, I'd just like to add on the reverse side, if you're talking about bringing advanced financial products to digital assets, I think the intricacy of tokenomics and tokens and smart contract-based solutions, I think that actually works really well, because you can build a lot of the logic of complex financial instruments inside the token, right? Inside a smart contract that the token is issued against, if it's legally backed, if it's backed on the license, etc. So I think that actually holds power in terms of the simplicity of settlement of that token afterwards, once you run the smart contract logic inside the token that you're listing for the more complex kind of financial instrument.
Yeah, indeed. That was my assumption also, but I'm more interested in looking at the prediction of do you see it coming in 3-4 years, or is it too ambitious?
It's all about the regulation, right? So you can do whatever you want. You can do the token now, but who's going to list it, who's going to accept it, and who's going to be running it?
Any other questions? I think we have time for one more potentially, not to put too much pressure on anybody.
I think everyone is tired now.
All right, I'm going to close it out with a lightning round question. Biggest hype word, overhyped word in digital assets right now?
I think I'm going to vomit if I hear the word interoperability anymore. So.
No one likes to say it either, you know? How about you, Artem?
Actually, I haven't thought about that one. I thought we were never going to get to it. For me, I think one of the hype words is definitely the security or trust. Everyone talks about how secure it is. And I think it's a lot of hype because actually what's underneath, what's the plumbing, we still don't know a lot of times. And now you see with all the different hacks is becoming quite apparent.
Yep. All right, Thijs.
Maybe two, but maybe last year it was mostly debt. So treasuries overhyped. But this year I would say, yeah, also AI. We love AI, but it's also in some of these projects it's very overhyped. Yeah, I mean every crypto token mentioned last year and this year that they are going to use AI, and most of them are down 95%. Yeah. So I wouldn't just trust it if someone says AI. Everything's
agentic. All right, Jody.
Maybe a little controversial, particularly in this group, but decentralized, I think is the most overhyped. It's the more and more we get in the space and you see traditional financial institutions getting in, the less decentralized we are.
Love it. All right. Well, thank you to our amazing panelists. Thank you to our hosts for the event today. And thanks everyone for joining us. I appreciate it.